Hello, everyone. Y'all, come on in, come on in. It's Simone Kason, cash counselor, money problem solver, dopest chick. So, of course, I'm always talking about money, stocks, and weed. Today is no different. I'm actually going to be talking about one of my favorite investing and trading tools, something that I use pretty frequently, which is Finviz. So, one of the keys to being a successful investor or trader or anything in the stock market. Um, is actually utilizing the best tools, right? And so the best tools are not going to be the call outs and all that other stuff. Best tools are going to be things that you'll be able to use and leverage and create a plan. So, of course, if you like this video, make sure you hit subscribe so that you can subscribe to the channel. We have a host of other videos that I will be sharing with you about many of the other tools that I use. But this is one of my favorites, and we'll probably do a couple of videos on these. And during this tutorial, I probably will kind of tell you about some of the other up and coming things that we're having. So make sure you hit subscribe and invite some friends or maybe even share it, right? All right, cool. So let's get started. All right, so first thing you're going to do is you are going to go to www.finviz.com, and that's Finviz.com. And you guys can see that in the comments, right? And so what this is a free site. They also do have an elite area, but it's a free site that anybody can use and it's a scanner. And if you're looking wondering what is a scanner, stock scanner is simply a way for you to filter down through like the 630 stocks that are out there. How do you filter down? And it's based on matrix that you put in. But in addition to that, it has other information that goes on that it talks about. And I kind of want to walk you through this and show you kind of what I use. There's a million and one different ways that you can use this, but I'll show you some of the things that I do. In addition to the free portion, because we're actually in the free portion. We're not even logged in, and you can log in, but this is just the free portion. And then there's an elite area that you can even kind of hone on a little bit more. So let's get started. All right, so this is the home page. This is the home page, the beginning, right? So we're surfing around here. Let's look at some things that it has. First, it will go in and it'll tell you about the Dow Jones. So the Dow Jones is a index that's used, and that is 30 of the the largest industrial stocks or companies that are publicly traded. So that's the first one that's on here. We can hover right here. It'll tell you if it's up, if it's down for the day. The next one is the NASDAQ, which is an exchange. That's one of the exchanges that we have. It'll tell you if that one is up or down for the day. And then of course the S&P 500, and NASDAQ has 2,500 actual companies that trade on that one. The S&P 500 are the most publicly traded, largest companies in the U.S., that 500. And so those are indexes or benchmarks that you can use. One of the things that we kind of use for our benchmarks is that, especially the S&P 500, if the S&P 500, let's say, is up, let's just use a round number, 20% for the year, and you look at your portfolio and your portfolio is only up 8% for a year, that might be a great idea, a great time for you to look and rebalance, because you want to get as close to what a great index is doing, right? So that's kind of why we use that as a benchmark. If every other stock is doing on an average 20% and your portfolio is doing less than that, then you might not be doing so good. If you're doing better, then maybe definitely you're doing better and you might not want to change it. So it's definitely a benchmark to be able to use, and that's the Dow Jones or the 500 S&P 500. I think very few mutual funds have ever beaten the S&P 500. I think the most well-known one is the Magellan Fund, created and managed by Peter Lynch. You guys hear me talk about him a lot. Growth investor, yada, yada, yada. We'll talk more about that. But so that's it. So that's the top part. All right. So definitely it's going to tell you here, if markets are advancing, what percentage is advancing, which percentage is declining. It talks to you about new highs and new lows. Usually those are 52 weeks. right? And so you'll be able to look at those. Above SMA, that's simple moving average, that's 50-day and 200-day. We actually use that in our swing and our trend trading. So you can watch the stock charting video where we go more into detail about actually leveraging that, but that's another way. And then the bull and the bear kind of area. This is actually, if you don't, it is the relative strength index, and so we also call that the RSI, but the relative strength index, and it just really tells you if a company is overbought or oversold. And so when you look at this in perspective, what happens is if a company is overbought, because we know that the price is based on supply and demand. So if you have a company that's overbought, meaning that people have pumped up the price, right? A lot of people hold it. Usually at that point, there would be probably what we consider a sell-off, and individuals will be selling their stocks at that point. So anything that is over 70%, what we see here, that's usually going to be bullish, right? So if 70% or more people are in the market right now, or in a particular company, or in a particular sector, then we consider that to be overbought. So 70%. So that's what we're looking for there. If we see under 30%, right? So 30% or less have, that means that it's oversold. So that means that not enough people are carrying that stock. So right now we're seeing kind of a difference, because the bullish part, the people that have bought, are only at 31 that we're seeing right now. And that was at 4 o'clock. And then the people that were oversold, or the companies that were oversold, were at 69. So kind of an opposite, but that's what you're looking for in the market. All right, so cool. Let's look at this. Over here, this kind of breaks down and it tells you the day. Now, let me say this. There is a difference in this screen if you are in the free program, and there's a difference in the screen if you are in the elite. The elite program is going to give you real time. So that's good for day traders. But the free program is 20 minutes delayed. So this is not an ideal place in the free program for someone who is a day trader. But swing traders, trend traders, yada, 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 you can hang out here, right? So I'm a swing trader, I'm a trend trader, so this is why I hang out here. So what is it going to tell you? So it goes through and it tells you, mind you, this changes, right? So it's going to go through and it will tell you some good things. So it's going to tell you what like the top 5 gainers are, right? So the ones that are trending up the most, it's going to tell you that here, and it gives you the ticker symbol, the percentage of the change and everything. Companies that have reached a new record high or a new 52-week high, right? The new 52-week high. Companies, as we talked about before on the relative strength index, or the RSI, those are going to be companies that are overbought, right? And then unusual stock volume, so a trading volume. So that means that if that company usually trades like 1 million shares a day or whatever, and now they're doing 2 million, or maybe they're doing 500,000, that is an unusual trading volume amount, and maybe in that time frame, right? Upgrades. What does upgrades mean? Upgrades means that the powers that be, stock analysis analysts, have looked at this company and they have given them an upgrade. So they have more faith in this company. It could be because of an earnings report. It could be because of great news where we talk about fundamentals. But whatever it is, for some reason, the people on Wall Street has now given this company a big thumbs up. So that's what that means. Earnings before. So earnings before just means that they're going to do their earnings reports before the market opens, right? And then inside buying, we get scared about that, not insider trading, but inside buying. And that's just to look at how much, if the board of directors, executives have started to buy in large amounts of that company's stock. And it was enough to kind of bring notice to it. Why would they do that? Maybe they know that there's a new product coming out. Maybe they got some good news. Maybe they're being acquired. For whatever reason, the people that are inside have actually started to buy. Now, inside trading bad information is when you react to something that is not publicly known. There we go. All right, now let's talk about the top losers. So it's gonna tell you the good, the bad, and y'all know the ugly. All right, so let's talk about it. It's gonna give you just as many. It'll give you the top 5 losers, ones that are not doing well this morning or at the time. But remember, if you are in the elite, it's real time. If you're in the free program, it's 20 minutes delayed. Companies that have reached a record low. It happens. Means in the last year they have hit bottom and hit the lowest that they've hit. And we'll talk about what we just about resistance and support, but we go into more detail about that too in our charting course. All right, charting video. Companies that are oversold. Remember what we just talked about it, right? That means that they're bearish. That means that not enough people are really holding them. And if they're undersold, that means that their relative strength index is going to be 30% or less, right? And so that could be an opportunity. But understand this, if it's undersold and it's been like that for quite some time, then you also want to think it might not have a lot of liquidity, which means that when you get ready to sell it, you might not have somebody that wants to buy it. Most volatile, that means that they have gone up and down in price the most during this time period. Downgrade is the same thing as the upgrade. The powers that be, the people on Wall Street have said, we ain't buying what you're saying. And of course, it could be due to the same reasons. Maybe they had a product that didn't work. Maybe they had an earnings report and they didn't make as much revenue as they should have. Or guess what? Let's talk about what's really, really crazy. Maybe they got new management or got some bad reports in the news. But regardless of whatever, that's what the downgrade means. And you can actually click it and find out. Earnings after just simply means that they're giving their earnings report after the stock market closed. So after 3:30. And then inside selling, that means that the board of directors and the executives and the CEO have sold some of their shares. Of course, there's a lot of different reasons why they would do that. Maybe they heard some bad news. Maybe some people are not happy. Maybe they are going under a merger or acquisition. But for whatever reason, that's what it is. All right, here, this area is called signals. It's all about alerts. And so you can go in and you can check out a lot of these alerts. And if you see where I hover, it'll show you what it is. But you have trending, where it's trending the support. Remember, if you go in and you watch our charting demo where I go in and I chart for you, but there are 2 lines that when you're utilizing in your charting, and this is more of our traders, we'll get into what our more fundamental investors do, but there is a support line and then there is a resistance line, right? And so the support line is the line that where it's last peaked in its last trend, right? The actual resistance line is the line where it has bounced back. So we also call that the ceiling and the floor. So support is also going to be the ceiling, and then the resistance is also going to be the floor. So great, let's look at this. So this tells you when a trend has been recognized, kind of alert. Now this is not something that you can just say, oh, okay, I'm gonna set my watch to this. But what it's telling you is that these companies have displayed what we consider a serious trend. So you know that there's going to be volatility and there's going to be up and down. But if we look here, any of these, you can see that there is a definite trend that is going up. Now this one is not so much, this is more horizontal here. Oh, it's under the horizontal. Oh, I'm lying. Okay, but cool. But so this one is definitely trending down. So we see a wonderful, not a wonderful, but a deep trend down. This one we see a deep trend up. What does that mean to you? That means to you that these companies are approaching their trend line. We see that it's hitting support, and that can be an alert on whether or not you need to buy and sell depending on your strategy. But we also have it here. And so wedge up and all those other things, I don't really use those. You do what you want to do. The one that I look at are companies that are channeling up. And the reason why I look for channeling up companies, because those companies are companies that are on an upswing. And of course, we all ideally want to have invested in Netflix at inception, we wanted to get Amazon and all that other stuff. Chances are, especially if you're new to investing, that might not happen, right? But one of the things that you can do is you can use and leverage these signals so that you can know when to buy in and when to sell, right? And so channeling up, one of the biggest questions that I get is, when do you get into a position? Well, you want to buy low and sell high. Are you going to always be able to catch it at resistance or at the floor level? No, absolutely not. Most of us can't. There is no time in the market, but you can get an alert of when a company is actually segueing into rallying. And this is one of the alerts that is channeling up. Now, it could go back the other way, but it at least gives you a little bit of guidance, right? This stuff here, this is the news. I love these, and we're going to go on. There's another one, but these are just kind of the news reports that are going on right now, what things are hot right now. Like it's talking about PayPal, you know, new normal, coronavirus. So all of those different things that are going on. This is press releases that are being put out, and then initial claims, continued claims, pending. So different things that are investment opportunities, press releases that are going out, those are on here. And then different ticker symbols. And last but not least, this is like the insider trading. It lists what company they're with, what position the person is with, and what the shares cost, and whether or not they're selling. So I don't know, you can use that information if you want. Might be pertinent, especially for long-term investors and some traders if they're looking to short sale. Futures and forex bonds, I don't really use this a lot. I actually do a little bit of forex, but not a lot. I'm not an expert. For me, what I say to individuals is all the time that there are riches in niches, meaning that if you're starting out, you really want to kind of stay in a sector and a market before you branch out. And the reason why I say that is because it is mind-numbing keeping up with all of this. You know, you have to keep up with it. You can't, even if you're just buying and holding. Right now, in the current state that we're in, it is imperative that you pay attention to your money. So with that being said, if you got to read about 10 different industries and markets and all this other stuff, it's going to be very, very hard for you to be profitable. So kind of staying in a good place and mastering one and then picking up another is going to help you out a lot. All right, so let's go to the next tab. We're kicking butt, y'all. Okay, so the next tab is the news tab. And so that tab, the home, kind of broke down. Oh, before I go, I'm so sorry. All right, real quick. This area is the heat maps, and we're going to go back into it, but we're going to actually, break this down. But I wanted you guys to see this is a heat map, and this breaks down everything into sectors, but we will come back to that. Okay, just want to get that out. All right, cool. I'm coming. All right, so the news sector is broken down into two different ways. So the first part is the news section, just kind of like we had before, but it's more intense. It's more, so you got everything from Bloomberg to Wall Street Journal to Market Watch, all of the big boys, ABC News, Yahoo Finance, all of those will be on the News Watch. But then you have the blogs, and the blog side is going to be all about those influential investors who create content and blog about different companies. So that's where that goes. All right. Okay, cool. So now we're getting to the meat and the potato, right? The stuff that really matters. And this is the scanner. And this is why we actually kind of made this video, because it's one of the biggest things that in the questions that I get is, well, how do you determine what stocks that you want to look for or whatever, and you might even want to invest in, and you want to put on your watch list, right? So we always talk about having a strategy and always talking about having a watch list. One of the keys to being profitable is making sure that you have a style, right? So Your portfolio should reflect your style, meaning that you should be determining, am I a day trader? Am I a swing trader? Am I an investor? Am I a trend trader? Whatever it is that you're going to do, you have to define it, because once you define that, then you can define how you're going to put your money and what your expectations are. So this is why the scanner is important. It's like 630,000 stocks that are traded every day globally, right? Ridiculous. That is massive. So this kind of allows you to create a matrix to understand what you're actually looking for. So the first tab in here, you got like the tickers, all that other stuff. You can actually you can save your screen. So why would you save your screen? You would save it so that you don't, like, if you are constantly looking for the same kind of companies, you don't want to keep doing it over and over again and putting in what you're looking for. So what you can do is, after you finish this, you can save your screen, and then you can even go in and edit it, but it will update and you could just use that, right? Okay, cool. As you guys can see, they do a lot of advertisement, which I think that's why we're able to have it free, right? All right, cool. All right, ticker symbol, whatever it is, signals, none on your stocks, ticker symbol. All right, cool. So let's kick it. So this is the descriptive part. It's going to tell you about the exchanges, the indexes, and the sectors, as we talked before. It's going to talk to you about shares outstanding, meaning how many shares are actually issued of this company, the industry, all that other good stuff. So that's kind of like an overview, right? And so right now we're looking at 7,546 stocks. It's a lot to go through. All right, cool. So the next part that we're going to look at is the tab for the fundamentals. Now, this is where my value kind of buy and hold people hang out, right? This is what they do. They hang out in there. You're looking for growth or value stocks. So you're looking at the fundamentals. You're looking at the company story. You're looking at the financials. So there we're looking at price to earnings, price to cash, the return on equity. See, I told you it's a lot of pop-ups, the return on equity, gross margin. All of these are things that you find on financial statements. And so they will drill down. You can drill down and kind of pick what you're looking for. Institutional ownership, really, really important. One of the key things that you'll learn is that Facebook, I think it's like 80% of mutual funds or no, retirement funds, right, own Apple and now Facebook, right? And so what that means is you won't see a whole lot of decline in those stocks, in those companies, because they're owned by institutional investors. Institutional investors are insurance companies, hedge funds, mutual funds, all of these different ones. So they're holding, and remember, just think about your retirement plan. Your retirement plan, you're holding that for a very, very long time, and they're buying large shares. So you may see a big increase as more retail people get in, but institutional investors. So what percentage of something that an institutional investor is holding, right? So that's what that is. Definitely something that you can look for if you're doing long-term, and that's why it's in fundamentals, right? The other one is going to be technical. Technical are going to ask you questions, or you'll be able to drill down on things when you're trading, right? And so you guys have heard me talk about the 20-day simple moving average, the 50-day moving simple average. If you watch the stock chart video, you'll be able to see why those are important, and we kind of use those as charting. We leverage that information to let us know when something is swinging. Over here you see the RSI, which is the relative strength index. That's just another part. We already talked about it. If the company is overbought or oversold, and you can even drill it down to did it have after hours trading, so trading overnight and all that other stuff. So a bunch of different stuff. So you can go in and do that. I like to do all, right? All, because I do some trading, and I also do quite a bit of long-term holding. So I have companies that I'm married to and I love them. And then I got some of them that's just my side chick and we ain't hanging out that long and we'll get in and get out. So now this gives you a big picture, right, of everything that's going on. Now, one of the things that I'm going to say to everyone, and we can make this quick and you can actually kind of make this your own. And as we watch other videos, you guys will be able to learn. But what I would say to you is one of the keys to, if you are going to start with a small amount, and I actually do a video on why it's so cool to start with a small amount. But if you're going to start with a small amount, and what I mean small, because that's a relative statement, $10,000 or less, you want to make sure that your portfolio, you're not putting all of your eggs in one basket. And so you want to make sure that although there are some really great, strong stocks and companies that are 100, 500, 600,000 dollars, I think, what is it, Amazon? Is it Amazon that's $2,000 a share? I think so. Close to it. Those are great companies, right? But if something were to happen, and mind you, Amazon is king, right, or whatever, but I hate to say it, but if something were to happen, would you be able to lose that much volatility? So if you only bought 3 stocks, if you only had like, $6,000 and you only bought 3 stocks, you put most of your eggs in your basket. So you really want to make sure that you are diversifying your portfolio. So what I'm sharing all that to say is that one of the first things that you might want to look at is actual price. So you might want to kind of drill down and say, listen, I want to work with companies that are under, let's say, $50, right? So you're going to look for companies that are going to be under $50. Another thing that I would probably look for is I would probably be looking for volume. And the volume piece is due to the fact that you want to have companies that are high liquidity, meaning that when you put in a price, until it's bought or whatever, it hits that price, then you're still holding it. So you want to have a company that has enough liquidity, enough people that are buying and selling it, enough volume, so that you can be able to get in and out of the position. So I would say definitely, you could say 100,000 to 1,000,000, right? So something that you can go back and forth. Now remember, oh, that's elite only. So let's get out of that. So let's say not over, something under 1,000,000. Let's see if we can get this. Cool. Okay, so under 1,000,000 or more in the volume. Remember we talked about niches and riches, and we'll talk about that more when we get to the maps part, but there's niches and riches, so you can always go to a particular industry. And if you want to leverage an industry that you've read about, an industry that you're interested in, an industry that you work in or whatever, this is a kind of a cool place for you to be able to do that. And so it'll tell you different sectors. You're not limited to this, but this might be, you might say, hey, I've been in the banking industry for a long time, or me, you guys know that that our company does cannabis and beer, so maybe you might be a beer company, beverages, non-alcoholic, just all kind of stuff that's in here. It has all kind of industries, so you might want to even look at the actual industry or what's going on. Another thing, of course, you might want to see if a company is overbought or oversold. And so as we talked about that, if it's overbought at 70, sold is 40. So you might want to look at like those. You might want to see some that are oversold, meaning that they're low and there's a possibility of people coming in to be able to invest, right? Because if it's overbought, that means that it's peaked, right? That means that it's kind of peaked, and it's yeah, I mean, pretty much it's peaked. So that's going to be it. And then I just got one more place that I want to be able to find. And that's gotten us down to, about 118 different companies from where we were before, right? And you can keep drilling down and keep drilling down. And now at this point, you can actually look at the companies, their change, figure out where it is that you want to go, what it is that you want to do, and make it your own. Again, making sure that you're able to utilize all these, and we're doing more videos on this, but this is a basic overview of what you can be looking for. All right, the next portion of this is the maps portion. My computer's taking a little bit of time. Okay, cool. All right, so heat maps are really cool. Let me tell you what I like about heat maps. So heat maps actually take the different sectors that are out there, and then it will tell you if it's positive or negative, if it's been going up or it's been going down. The more intense the color is, the more of the percentage of it going up or down, and that's pretty much it. So the more, so like if tech, that means it's the deeper that it is. So the more intense the color, the better. So what it does is it will tell you what that is. So it says, software infrastructures, and then it lists what those companies are that they're measuring them against, right? So these are the companies that are in that sector that this map is a reflecting of. There will be sometimes that you will wake up in the morning and the map is all green, and then there's other days that the map is all red, and then you see it like this where you have a little bit of everything. So if you are looking, as I said before, riches and niches, or if you're looking at a particular sector or a particular industry, this is a great way for you to kind of study and see what that actual industry is doing right now. And it breaks it down from everything from healthcare or sector, I'm sorry, from healthcare to industrial. We got real estate, we got healthcare plans, diagnostic research, financial area. You click on the area, it will tell you what it is. Industrial includes UPS, FedEx, moved, but just so many of them. You can click on there, you can see what they're doing, and why they are in this sector, and how they are contributing to the red or the green. This breaks it down as a S&P 500. You can do it globally. I think that's another map, and then full spectrum, and then also exchange traded funds. All right. And that's pretty much most of the stuff that I actually use. The groups and the portfolios, you can definitely use this. This is just another form of it breaking down in the sectors, but this is pretty much what I use. I don't use too much of the portfolio, the insider, futures, or Forex, because I kind of try to stay in the stock market. But of course, if you like this video and you want to see me again, make sure that you hit the word subscribe. Come back and hang out with me. We got more videos on how to use a chart, and I really have another video on the heat maps. So you got to check that out, on really deep diving into how to leverage a heat map. So hit the word subscribe, come back and hang out with me, and watch this next video that we have coming up on how to use a stock chart. All right, I'll talk to everyone soon, and I love you guys like I love myself.